welcome to another edition of Weekly Forex Forecast on FXKLEX'S. My name is Alan, your financial analyst and your Forex mentor. In this week, I'm going to be sharing with you what I'm looking out for on my trading chart should in case of any breakout opportunity. I have the GBP against the American dollar, I have the euro against the American dollar, I have the American dollar against the Japanese yen, and I have the Australian dollar against the American dollar, and also I have the Swiss against the American dollar. Also, we're going to be rounding up things with the gold. So what am I looking out for on this currency pairs? This is what I'm going to be taking you through in this video. And if today is your first time viewing this program, watching this video, do not forget to click on the subscribe button below this video and also click on the notification bell at the end of this video, so you could be notified whenever I post video of this kind. And if you are watching me from my social media pages, do not forget to follow my profile. And a quick disclaimer about this content: this is not intended as a financial advice. It is based on my personal opinion. Remember, Forex is an high-risk investment and also an high-reward investment. So do not trade more than the amount of money you can afford to lose, and do not trade with a borrowed money. So the first on my screenshot right here is the euro against the American dollar. We can see how choppy this market has been right from the that is June 2019 of this year. This market has been downward in a bearish trend. Right from here, we have a bearish trend right there before price got to this level. Before we got a rejection of price, this low right here, our price did move up again and then got resistance at this zone again, serving as a high to this region right here. Then again, price did went down and then retesting our support right here. This is a support right here, creating another retesting of support right here. We have a support here, we have it right here, and then again price did went up and then retesting this previous support, now turn as a new resistance level, which lies here right here. We can see it's in fact a very strong resistance and support level or key level right in this market. It's acting as a resistance level again for this market. Our price did retested our support level again, thereby this validating this is strong support again. And then before price went up, we saw a choppy market right here before price went up again, and thereby retesting this previous resistance, which lies as 1.11743. So right now we can see there's a lot of volatility in the market that was throughout last week, due to the Boris Johnson conservative election, which was in news, which was being released. So it did affect the forex market, like I always emphasize on about the effects of the news. So this resulted in volatility, and right now we can see the rejection of this candle right here. Rejection of candle right here, it's a signal of a bearish interest. That is an interest for the seller to push price right down again. So now to construct our trend line on this market, so we can see the power, the strength of this trend, how strong it is. So here is my trend line right here from this low right here. I'm gonna draw it here, and then again we have it right here. I'm gonna draw it. We have right here. So in fact, this is a rising channel, and in a rising channel, price keeps on creating a series of high low and a high. This is what I mean. So this is what I mean right here. This is a high low to this price right here. This is a low right here, and then this is a high right here, high here to a low high here, which this is giving us a signal that the trend is trying to resume in a bullish trend, but this on a short time trend. So traders, we can see this price have been carving a series of high highs and a high lows. So what I'm looking up to right now is to find an opportunity to see a defined entry signal for me to execute a trade right here. Right here, due to the volatility and the retracement of price right here, I wouldn't want to short the euro against the American dollar in this kind of a rising wedge. You can see this rising wedge. So I will look for an opportunity right here. I'm looking up for an opportunity right here. If price can retrace downward right here and retest this our dynamic or support or region, if I can see an opportunity to to long, to buy the euro against the your American dollar, then I'll be willing to do that. Or if price can move up and breaks our resistance level right there, and price move and then there's a retest, then if I can see a well-defined entry signal for me to go long, then I'll be willing to go all long right here. But if price can close below our dynamic support, that means the bears are willing to re-expose our next support, which is at 1.0910, and a retesting of this support region is gonna create more room, more energy for the bears to be willing to retest the support, the next support, which lies at 1.09248. Well, right now I'm staying up or out of euro. I don't like to take a trade within the range. So next on our list is the pound sterling against the USD.
So now on the GBP against the American dollar, we can see GBP has been moving, in a bullish trend. That means in an upward direction. In a kind of very strong bullish trend like this, I wouldn't advise you to go against the trend, because there are a lot of no damages that can be done to your account when you try to go and anti-trade in a very strong trend. So right here we can see the momentum right there. It's very good. We can see price have been having a series of high lows, now high lows and the high highs right here. And this is it right here. This is a high low right here. We have our low right here. We have our high low right here. We have no high low right here. We have our highs, highs, highs here. So in this kind of trend, it's not advisable you go against the trend. We can see Friday, candle alone, it's worth over 300 pips. So in this kind of market, if you are not careful, the position size you execute, you can get your finger burnt. You can even getting your account being blown off. We can see price still broke out of this resistance level, which is acting as a resistance zone right here. Actually, price was fluctuating at along this horizontal resistance level right here before price broke out. Now, will this act as a new support or level? So that is what we are looking at for now as a trader, in order for us to forecast see the entry bar to give us to convince us maybe we're gonna go long in this currency market. But right now I wouldn't want to short the GBP against the American dollar. Let's insert our trend line and see how strong this trend is really is. Now I'm gonna go through my templates and install the trend line right on my GBP USD. We can see in this market, GBP has been in a very strong trend, with this formation of a rising wedge. Now we can see in our previous resistance right here, which is from the first that is February of 2019. That is the highest peak of GBP USD in 2019, and which was being broken last Friday with almost 300 pips worth of candle. So in this kind of high volatility market, it's advisable you take a lower position size. Let's say, for example, if you trade one lot, it's advisable you reduce it to half lot, even quarter of the lot. So what I'm looking out for in this type of market is I'm looking out to see a rotation downward right here, and if this support level right here at 1.3172 can validate, can reject price, we can see a defined signal bar for us to execute an entry order, then I would love to only buy at this one. But right now I would not like to buy at the range market or buy at the top right here, because price may retrace downward. But that doesn't mean once price gets right there, I need to buy immediately, because we can see right there, this is an horizontal support level right here, and then dynamic support level right here. In fact, this is a confluence zone. So I'm expecting price to form an entry signal for us right there. But if price wouldn't form a well-defined entry signal, this can trigger serve as an interest for the bears to move price more downward to retest our previous support, which lies at 1.29805, which was the previous resistance for the market right here and right here and right here. So at the moment, I'm still watching out for GBP USD should in case of any signal for me to buy at this zone right there. And I will be very careful the position size I will be executing due to the high volatility in this market at this period of time. The past years, right from the beginning of 2019, we can see price have been moving downward, and in the long time trend we can see GBP have been falling from this region right here downwards here. This is it from here, this extreme peak right there downward here. So this still a short or term bullish or trend here. So in this kind of market, you have to be very careful in the position size you're gonna be executing. And now on the Australian dollar against the American dollar, we can see Australian dollar have been in a bearish trend for a long period of time, right from the first, that is January of 2018. Australian have been moving down on a long-term trend, that is a bearish trend. You can see price have been casting a series of low highs, low highs right here, here, and we'll be seeing a series of that is lower lows, lower lows. In fact, this trend, it's a very strong bearish trend which hasn't happened right from more than a year right now. But on Wednesday, something fantastic did happen, whereby we see the bull, which they were able to break out of this, that is a falling wedge. We are able to break out of this falling wedge, and this is it right here. We can see after they broke out of this falling wedge, there was a retracement down back into the medium of the falling wedge, and then on Thursday, price did breaks out of this ascending channel, and there it was a great fantastic bull for the bulls to be able to break out of this region from something which has been happening for running to almost a year now. I think by January 28, 2020, it's gonna be running to 2 years. But they did break out of this region in December. That was on Thursday, and then on Friday something against the trend happened again. We can see there was a bearish engulfing candle formation that formed on Wednesday, thereby engulfing this bullish trend up. And also, if we check on our chart, we can see our resistance also lies right here, which is at 0.609725. Now the question is Australian dollar going to break out of this channel and continue to move into an upward direction that is trying to carve another series of high highs and a high low to create a bullish trend? Well, I have to obey this potential of horizontal resistance level, which lies right here, and also a fourth, that is a retracement of this candle right here, forming a bearish engulfing pattern right here. Also, again, I have to respect the potential of our dynamic resistance level right here, which is also serving as a rejection area right here. This is also a complex zone right here. We also have a rejection of price right here, rejection of price right here. So these are the two things I put into consideration, which will repel me from wanting to buy Australia at this region. So if price can fall below this bearish engulfing pattern, it's gonna create an interest for the bears to move price downward again, and this could retest our next dynamic support levels, which rise direction. And after price are broken this our previous high low right here, the bears sellers might be interested to break below again our next high low right here. By the way, I'm looking out for an opportunity if the bulls can be able to break above these two key levels right here. I mean the horizontal resistance level and the dynamic resistance level. If the bull can be able to break out right here, and then if I can see a retest of price, now revalidating this our dynamic resistance level as a new dynamics or support level, then that is when I'll be willing to long the Australian dollar against the American dollar. And if I can see something like that, I will be willing to stay up the Australian dollar. So now on USD against the Swiss, not really much right here. We can see Swiss have been in a state of consolidation for right from September right now to December. We can see price have been in a choppy market that is moving within the range. In this kind of market, I don't like to trade it, because the market has no specific, defined, direction to break out to. I like to trade a trendy market, a market either is trending in a bullish trend or in a bearish trending market. So in this kind of market right now, I can't figure out a potential trade right now. But for the sake of people or traders who love to trade or market within a range like this, maybe buying at the low and then selling at the top, well, we can see after price did break out of this or support resistance support region like right here, which horizontal support region right here, which price have been obeying for some period of time. Right now we can see it right here. we can see no our highs right there, our highs right there. Price have been respecting it, but price had broke out of this region or right or not. So we can, it seems price is trying to move back into this within the range trading market. Well, for those who want to trade the range market, if price can eventually move up or right here, it may trigger an interest for the bulls to move the price up again to retest this horizontal resistance, which lies at 1.0008, whereby you have your stop loss somewhere around this area. But for the kind of system strategy I have, for the kind of trader I am, I don't like to trade a market within the range. And now on the USD against the Japanese yen, we can see price have been carving series of high lows and the high highs. This is our high low right here, high low right here, our high low right here, our highs, highs, no highs or highs or right here. If you watch properly on this chart, on this image, you will be able to spot out an inverse head and shoulder. These are the shoulder, these are the shoulder, and these are the head. I highlighted it with a blue rectangular image. So as price is carving a series of high highs and a high lows, right? This signal of bullish trend. If you watch my previous video whereby I posted the technical analysis, that is the daily technical analysis, I said I can spot an opportunity to short the Japanese yen, USD against the Japanese yen. I said not until if price can break below this previous high low right here, because I can see price have been making a series of high low and a high low. So if price can void it right here, that they can give a signal of the bears to trying to have their other side of the coin. But unfortunately, the bulls were able to defend this zone, thereby pulling price up upward again, thereby breaking this our resistance level, which have been repelling price at this junction right here. So what next now? If we go on the if we zoom in properly on our chart, we can see this is a falling wedge, that is a falling channel. We can see our horizontal dynamic resistance line right here. We can see right now we also have another rising narrow wedge right here. So in a narrow wedge like this, also we have another channel rising up. What I'm looking out for, I don't want to buy at this region right now. I am looking out for if price can break out of this that is our horizontal resistance. Like here, remember we have our resistance level right here, and if price can rate, it's possible price respect this horizontal resistance line. Also remember we have our dynamic resistance line right here. This is it right here, right here, right here. These are series of low highs, low highs, low highs, low highs, low highs, all right there. So right now we have forces all right there. This is in fact this is a confluence zone. So where the bull have a lot of work to be done in order to break through this region right here. So right now I'm watching out on USD yen. If the bulls can be able to break out of this no channel right here, then it can serve that the bulls are trying to change the trend upwards, because this trend have been on a long time trend that is from 4th of October 2018. That is more than a year and running to 2 months right now. And the other way around again, during this rising wedge, if price can come and break below this our previous high low right here, this our previous high low right here, our previous lows right here, that means price can come down and fall below this high low right here. It may trigger an interest for these shares to be able to retest this our support level, of which lies right there. So right now I'm watching out of an opportunity either to the break side or below. No, for me to take a short side of the USD against the yen, I have to see a break below this our previous high low, and for me to see a long position, I have to make sure the market breaks out above this confluence zone right there, breaks up. Then if I can see a retest of this our horizontal so that is resistance right here. If it's now acting as a new support level, then with a well-defined entry signal for me to go long, then that's when I will be willing to go long on the USD yen. And the last on our list is the gold. I refer to this whole market as the king of all. So we can see gold has been trading in a falling wedge for that is right from August of 2019. We did see an head and shoulder right here, head and shoulder right here, head, shoulder right here. but this head and shoulder did no failed. Actually, the neck was being broken with a fake breakout before the market retraced back, into the in the up, thereby casting a series of lowers, lower low. Can see it right here, lower low, and then we have a series of low high, low high, low high, low high, which is a signal of a bearish trend. On this market like this, this our horizontal support level right here, and price is respecting this level. If we trace back to history, we can see that this is a resistance level for the price right here before price did breaks out of this region right here, moving up to the highest peak of gold in 2019, which is the 1556.92. So since then, no, gold has been falling downward, going downward in a bearish trend. Also, again, if we take a close look on our gold trading chart, I can spot out a bullish trend. We can see how this massive rally up right there, and then this falling wedge. To me, this is a chart pattern for a bullish flag. I will make a drawing right now. To me, you can see our price rallied up right from that, from this low right here, up, and then you have something like this. So I can see this as a bullish flag. So price have the higher potential to break up and target this our next resistance level right there. And by the way, if price can pull downward, now break this our horizontal support level right here, breaks down, I wouldn't like to short the gold, because in a falling wedge, technically price should break up. Also in a rising wedge, technically price should break down. When no price break out of a falling wedge, this does result into a bearish stripe. Sometimes you see the price going down with a little bit, and then retrace, pass up, thereby leaving some of the sellers out of the market, right here. So what I'm looking right now for as a trader is to figure out where I can get a potential trade with a high probability or winning or high winning probability. So right now, we can, if we zoom in on gold, we can see this is a falling wedge. We can see price have been respecting this our dynamic or resistance level right here. Right now I can see still trading within the range, and I haven't seen any entry bar now for me to take this trade. For the sake of people who are asking, oh Alan, we want you to give a technical analysis on the gold, can we buy, can we sell right now? At this moment I can't see any signal for a buy or for a sell or order right here. I'm still waiting out if price can get maybe if we can see a break above this our dynamic resistance. Remember, in a falling wedge, price technically price tends to break up, and if I can see a break at the lower edge, that is at the support dynamic support right here, I wouldn't like to take a selling position right here, because this is a falling wedge. Technically a falling wedge, price price tends to break up higher. Whenever price breaks down like this, it do result into something called a bearish trap. Sometimes you see the market whereby the market will move down, whereby you will see the market will break out below and move down, before you see what next, the market will get back into that channel, thereby causing right here a bearish or what is called bearish trap. So in this kind of market, I wouldn't want to take a short inside, because I can see this a rough falling wedge once again. So I'm looking out for a reversal partner, I mean a breakout signal. If price can break out right there, and if I can see price can retrace, and then by revalidating this our dynamic resistance level as a new support level, then I'll be willing to have a long position up to aim this our resistance, which lies at 1556.92, which is the highest peak for gold in the 2019. The forex market offers a lot of unlimited potentials, opportunities. So you shouldn't just strict yourself to a kind of market which does not provide a high winning probability. There are a lot of currency pairs in the forex market, so go around, check around, look out for the market which gonna offer you the best winning set up. And that is all I have for you this week. Do not forget to click on the subscribe button below this video, and also click on the notification bell ahead of this video so you can be notified whenever I post videos of this kind. And for now, have a wonderful day. Bye.